It is possible, and that would give me fuel to potentially short the dollar heavily by buying more gold, by buying other things, and maybe even giving us a bounce in the S&P 500. So again, measured move, 2014, 12 up weeks in a row for an 8.33% move. Here we're at 11. Do we get one more, which takes us right up to this level here, which, by the way, would be right around, like, right 106.50 or so, give or take, maybe a little higher than that. And again, does it give us that same thought process? All right, next chart. Let's keep rocking and rolling here. QQQ. Qs fell yesterday. We know that. Big dump out. We did get the small bounce prior.
On Wednesday, the benchmark 10-year Treasury yield surged, reaching its highest level in over 15 years. This increase was driven by traders' concerns about persistent inflation and the expectation of tighter monetary policy for a longer duration. The 10-year Treasury yield rose by 5 basis points, reaching 4.612%, and had previously reached 4.566% on Tuesday, the highest level since 2007. Additionally, the 2-year Treasury yield increased by 6 basis points to 5.139%. Worries persisted about a potential U.S. government shutdown, which could commence as early as October 1st unless Congress reaches an agreement to fund the federal government beforehand. Such a shutdown could have adverse effects on the U.S. credit rating, as cautioned by Moody's rating agency earlier in the week. Wells Fargo also noted that it might lead to a decline in the U.S. dollar index. President Biden called on Congress to address this issue. In a video analysis, Gareth Soloway delves into the yield and dollar projections using charts, while also discussing Bitcoin and his chart-based outlook for the future.
We know the yields have continued to rally to the upside. Now, again, we are seeing a pullback today back below 4.5%. The biggest thing to me continues to be the charts. They rule everything. Frankly, this is an important lesson for us all to learn. It doesn't matter what I think, what I feel, what I hope happens. And by the way, people in crypto, in the markets, they always have to understand this. It's what do the probabilities tell us? What do the charts tell us? And what we can see here very, very clearly is that the chart has shown us that we have rallied up substantially in yields, and we basically are broaching on that 4.6% level. So again, based on charts, that's telling us we're getting towards the end of this run, at least in the near term. Doesn't tell us where we're going to be in 3 months from now or 6 months, but over the next 1 week period, which is what these game plans are for. This is to game plan your current price action, to give you actionable alpha, to crush it on your trades. And that again is telling us we're near the end. And so I've said this before, I'll say it again. I think an accumulation right now on the TLT is interesting. I have accumulated some myself. And again, TLT basically goes up when yields pull back. It's an ETF. All right, now again, we're not looking for a break the bank home run here, right? I'm not expecting yields to come back down here or here or here. It's looking for a short-term trade. Game plans, again, guys, short-term trades with a view on macro data and everything else. All right. So that's what we're looking at. Now, by the way, is it possible that in 6 months or 8 months, we could actually come back to the low end of this? Yes, I agree. I think that's ultimately a very good possibility. But again, shorter term trades, you look for a pullback, a retrace, I would say right in this 4.3 to 4.35 level. That's where I would be looking to take profits myself on something like the TLT. You have a wider view, you want to take a longer term trade. Yeah, you can be patient down here. I just always tell people that it means that there's more chance of error. The longer out your trade, the more chance something goes wrong. So shorter term trades for me, that's what I've grown accustomed to. Long-term investing is great, but inevitably you're going to go through recessions. Think about this. People that were going to retire in like 09, 2010, everything was going great, and then 08, 09 happened, and then they couldn't retire. That's okay. I mean, if you really have a long-term horizon, it came back, right? But I don't like going through those periods. I want to make money up, down, sideways, you name it. All right, so that's your first chart there that we had to go through. Next chart, we're going to go through the DXY. Now, the DXY here, this is fascinating. This is one of my favorite charts of the day. The dollar has continued to go up. I thought the dollar would stall out. So far, it has not. But there's something I want to show you here. This is called a measured move. And the dollar is now in its 11th weekly green candle, 11 weeks up. There is only one point in the last 10 years we've had at least 11 straight gains. And I'm going to show you this because the measured move can be useful when analyzing this. So what I'm going to do real quick here, we're going to scroll all the way back. We have to go back in time, get in your time machine all the way back back to the future style here, and we're going to take a look at this period. In 2014, okay, in 2014, what did we see? We saw a beautiful move up of actually 12 total weeks up before you got a pullback. Now, the first thing to note is we did get a pullback, which is telling us it's probability-wise, right? Think about how few times in the past even 20 years we've had 11 up weeks in a row. This was 12, and then you got 2 down candles. So again, starting to expect a pullback on the dollar is probably the right move. The question is, what does it do after? Here, in this case, it went up, pulled back, and then went even higher. We have to think about that. That is a possibility. Is the move that we're seeing right now in the current period the beginning of a bigger move up? I doubt it personally, but you can't discount it. The charts always rule the day. Now, again, one of the things I want to show you guys here is this move here. The up 12 candles, 12 weeks in a row on the weekly chart, it was 6.677 on the DXY. So $6.77 rise, and it was an 8.3% move. Now, if we do that same measured move and we go back to current times, so we're going to go fast forward again. Let's go all the way back, all the way to the current time frame here. And what we see is that if we were to do the same percentage move, 8.33%, it would also coexist with this trend line down here to here, right through here, and right through here, right? So that would give us this trend line right here, which is also an 8.3% move. So again, in 12 weeks, is it possible we get one more up week in the dollar to equal that move, and it would equal the same percentage move from 2014?
Bitcoin's recognition in China seems to be gaining ground, with a Shanghai court report acknowledging digital currencies as unique and non-replicable. However, on the flip side, Bitcoin's spot exchange trading volumes have hit a 5-year low, as reported by crypto analytics firm CryptoQuant. Analysts suggest that one significant factor contributing to this decline in trading activity is the increasing anxiety surrounding the macroeconomic outlook. Despite the rise in long-term holders of Bitcoin, the reduced trading volume poses a risk in terms of potential unexpected price volatility. This means that price swings resulting from liquidations and derivative contracts could potentially harm the market structure if there aren't enough active participants. Additionally, traditional financial institutions are becoming increasingly uneasy about handling cryptocurrency-related payments. Now, let's turn our attention to Gareth Soloway as he conducts an analysis of the Bitcoin chart.
Look at what Bitcoin's doing today. Now, this is an important chart because we know that we have a downsloping trend line here, and essentially my thesis here for you guys is that we might be on the verge. It's getting more probable that Bitcoin can have a near-term breakout above this downsloping trend line. So we have this pivot high to this pivot high, and then right here, and again, we pulled back, which is to be expected. Remember, every time you hit a line, it's the same as you ramming into a door. Same thought process. You ram into a door to save your cat in the burning house, whatever it may be. The odds of you getting through that door on your first hit, probably 0, maybe slight. The second time you hit it, the door weakens. The third time it weakens more. Eventually it breaks down. So the idea here is, here's really your first hit, second hit. Now you're on hit 3. That door is weakening. So again, the thought process is that it doesn't guarantee, but I would say that the chances of us breaking through here were probably, I don't know, 20%, right? Now you got to here, 30% chance of us breaking out. And obviously that's still lower than 50%. You're now probably getting close to, oh, and again, messed that up a little bit. You're probably getting close to 50%, meaning that there's a 50-50 chance of breaking through on Bitcoin. Now, again, the key is to understand what this means. Does it mean we're going back to all-time highs? No, it doesn't. All it means is you're breaking through this trend line. So again, I love crypto people, don't get me wrong, but the crypto people are probably the most emotional people in investing. It's just the nature of the beast, which is okay. Generally, they're the youngest crowd. When I was young, dude, I was ridiculously emotional about everything. Everything was going to the moon. Everything was going to make me millions of dollars. And then again, I panicked when things dumped out. I mean, that's just the nature of being young and inexperienced in any field. Now, again, the key is if it breaks through here, where does it go? Well, the idea here is you have this pivot top right here, which is now resistance, right around 28,000. But I do think there's a chance we could test this line, which again is very common to go back to the scene of the crime. So it's a possibility that we get back to 30,000. Now, if we get back to 30,000, it does bring this pivot high breakout into alignment, but you can't assume a breakout above this. Same kind of thing. All right, so odds of breaking through here, probably 30%. Here, 40%, right? Eventually it was 50-50 or even higher, and we broke through. Now we're on the underbelly, which means we're starting from zero again. So the idea is that the first hit here, chances of breaking through this 30,000 level would probably be in the realm of only about 30% chance, right? So again, you have to go back to probabilities. Everything is mathematically figured out in trading if you want to be the elite. All right, do you want to be that top 0.1% of traders that just crush it? Well, then you got to kind of go by probabilities. And remember what I said earlier. It's not your feelings, oh, I really hope it does this. Oh my God, if it only did this, I'd make some. That's BS. Doesn't help you at all. Be a mathematician. Figure out probabilities. That is what will do to you or help you.
Bills focus on cryptocurrency regulation, market structure, and stable coins could face delays if U.S. lawmakers fail to agree on government spending by September 30th. A potential government shutdown, which could occur within the next 7 days, is looming due to political pressures on House Speaker Kevin McCarthy regarding spending plans. This shutdown may significantly impact the progress of cryptocurrency-related bills that recently gained approval in the House Financial Services Committee. These bills include the Financial Innovation and Technology for the 21st Century Act, Blockchain Regulatory Certainty Act, Clarity for Payment Stablecoins Act, and Keep Your Coins Act, potentially leading to a House floor vote. However, a government shutdown would effectively halt legislative activities until funding for the next fiscal year is resolved, potentially causing delays in crucial crypto-related legislation. The longer the shutdown persists, the more these bills, some of which enjoy bipartisan support, could be affected, especially considering political disagreements on topics like stablecoin regulation. Lawmakers have until September 30th to reach an agreement on spending bills, and a shutdown would disrupt non-essential activities across federal agencies, potentially impacting regulatory bodies overseeing digital assets. The possibility of a U.S. government shutdown raises concerns about the cryptocurrency market's regulatory developments and the potential consequences on the financial system. Share your thoughts on this situation in the comments section below. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.